video, I'm going to give you a free trading coaching session. I'm going to help you to iron out your biggest weakness and to identify the area of your biggest losses and to make positive changes no matter what that is. There is an exercise in this video, so if you watch it all the way through and follow the steps, you should see results in just 1 week. So this video is for anyone at any stage. So those who have been trading for a while and are still not profitable, those who are break-even traders and obviously want to be profitable, and also those who are just starting to make profits. I understand this is actually a really frustrating part of your journey because you're starting to see profits and they're just not big enough to actually live off or make a difference from, and you want to improve. So often the area to improve on is reducing losses. So what we're going to do is we're going to identify your biggest losses and your areas of weakness, and we're going to come up with practical steps to help move you forward and iron out those bad habits. So often what happens in trading is traders are really aware of what their bad habits are and what they need to do, but they still struggle to actually implement those changes. So I'm going to help coach you into better trading habits. If you're looking for a trading coach, then follow Trading Angel for more. And also if you do want one-to-one coaching after finishing this video, then you can email info@tradingangel.co.uk. So if you're new to this channel, then welcome. My name's Caroline. I'm an indices trader. So I trade the Dow Jones and the NASDAQ during the New York session. I've been trading myself since around 2015 and I've been coaching traders since around 2019. So the reason why I wanted to do this video is because I've coached over 100 traders one-to-one, and I know that so many of them are so self-aware. They know exactly what their weaknesses are. They know exactly where they are losing money and they're losing points, but they still really struggle with the mental hurdle of implementing the new habits that they know that they should. So if you know what your bad habits are and you know what you need to do, but you're still struggling with it, then this video is perfect for you. So a bit about my background. I have been coached by institutional traders myself. My background is actually in broadcast journalism, which is why I love making trading videos. I think that that's actually helped me to make complicated subjects easier to understand for people. And I do also have a separate qualification in finance, so that's a different qualification for financial advisors. However, please note that I am not currently working as a financial advisor, and nothing in these videos should ever be taken as personalized financial advice. I've got risk warnings along the bottom, so if you want to have a quick read of that and make sure that you understand it. CFDs and trading CFDs are really risky. Most people who trade CFDs do lose money. It's not quick and it's not easy. So the first step is you want to face the facts. You want to identify and name the problem area. As I said, most of you will probably know what your problem area is, and this part shouldn't be too difficult. However, if you don't know what the problem area is, then the easy way to do that is to go through your profit and loss, which I know is the most boring and harrowing experience you can ever do, especially if you're a losing trader. You don't want to face the facts. You don't want to see where you're making your biggest losses. But if you just take a moment to do that and see where the biggest losses are for the days where it was all just red, 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 or you took particularly big losses, if you can identify what the problem is, then we can figure out a solution. So I'm going to go over the most common problems. As I say, I've coached over 100 traders one-to-one, and I see the same things coming up over and over again. So that is overtrading. Most traders are guilty of overtrading, and that is where a lot of their losses come from. Letting losses run and cutting their winners quick is another one. Trading when they feel like it, adding to their losses rather than adding to their wins, and showing up at the wrong times. So pick one of those to start with. If you're guilty of more than one, then you can come back and rewatch this video and iron out those habits. But I would suggest just trying to focus on ironing out one habit at a time. As I said, it's quite difficult to implement a new habit, and it does actually take quite a lot of work and focus. So you do want to be focused on this. So pick the one which is the biggest offender, the one which is losing you the most money, and aim to iron those out first and then come back to the others. I'm going to give you some examples of appropriate solutions to each of those. So if your problem is overtrading, then a simple solution is limiting yourself to one trade a day and having a non-time sensitive activity to move straight onto. So I know that if you're an overtrader, me telling you to limit yourself to one trade a day doesn't necessarily stop the problem. So that's like me telling an alcoholic not to go to the pub. It sounds much easier in theory than it is in practice. Stick with me, because as we go through the rest of this video, I'm going to explain to you how we're actually going to be cementing that habit. So I know it sounds easier said than done at this stage, but there is an exercise that you're going to do to help get you there. So limiting yourself to one trade a day will help you with your overtrading. I know that sounds really obvious, but have a non-time sensitive activity to move straight on to afterwards. The reason why it needs to be non-time sensitive is because I, for example, trade the US 30 and the NASDAQ in the New York session, which means that the session's fairly long. It's about 6.5 hours. And, you know, you can usually trade for about 2 hours and get a nice move at the beginning from the open. But the move happens at a completely different time each day. So sometimes it's directly off the back of the open, which is 2:30 UK time, which means that you can be free by 3 o'clock if you get a nice move then. But if the move doesn't happen till after 3, then you might still be hanging around at 4 o'clock. So it's going to be at a different time each day. So you're not going to know how long you actually have to spend in front of your computer each day. So you want to have something else to move on to distract you and to take your attention away from trading, but it can't be time sensitive. So when I was making plans with other people, arranging to meet my friends or to go on to do something that was time sensitive, it meant that I was rushing the process of trading and I wasn't actually doing a good job and trading properly. But if it's something like, you know, you want to get your 10,000 steps in, so you go for a walk after you finish trading, or you want to book yourself in for a gym class once you've finished trading, anything like that which isn't time sensitive will help to take your attention away. Another one which I like to do is, because I make videos on trading, I will often make my content after the trading day, and therefore it's not time sensitive because it can be done at any time, but it also completely distracts me and it makes me feel like I'm being productive. If you're letting your losses run and you're cutting your winners quick, this is a really, really common mistake that a lot of new traders make. You want to find a strategy with a risk to reward ratio in your favor and impose a rule where you can't adjust the trade. So again, this is something that I used to do when I first started. I've actually done all of these, so I'm speaking from first-hand experience. I've had to iron out all of the bad habits to get to where I am. With this one, I had to force myself to have a set strategy with a stop loss and a take profit. So before that, I was just opening the trade, sometimes with a stop loss, and I would just let it run until I felt like it or it hit a number that I was happy with. I mean, it works sometimes, but on a day-to-day basis, that's not really good trading. So now I have a strategy with a risk to reward ratio of 1:4, and I have to just leave it. So if you're guilty of adjusting your trades and just taking big losses and small wins and it's all a bit random, then you want to find yourself a strategy with a set risk to reward ratio. It's in your favor, and therefore you can only have big wins and small losses. And if you're still not in profit after that, after you've let several trades play out, then you know that your strategy doesn't play out in the long run, and perhaps you need to adjust it or come up with a new confluence. So trading when you feel like it, this is so common when you're a new trader, because perhaps you don't realize how time sensitive the market is. The market might just make 1 or 2 big moves in the session, and it doesn't care about your schedule. It doesn't care when you're on your lunch break. It doesn't care when it's convenient for you to trade. It moves when it needs to move. And if you want to be a trader, you need to be around at the times when it does move. So it's quite difficult when you first start trading, because you're trying to juggle the job that's actually paying you and also practicing this new job, which you hope is going to pay you. And so you obviously need to prioritize the job that's paying you, but you also want to be around to catch the big moves. So what I would suggest for this is think of the times of day that you are realistically able to dedicate just to trading. So if you have a lunch break at a certain time, or if you're able to dedicate a couple hours before work, You then need to figure out which market moves in those times. So it could be a matter of adjusting the market that you're trading, but you definitely don't want to just be turning up when you feel like it, just hoping that the market that you've chosen is going to make its big move at that time. You really do have to be strategic about it. So which market moves at which time, and are you actually able to dedicate that time to it? So for example, I trade the US indices in the New York session, and I live in the UK, which means that New York opens at 2:30. So I have to be around in the afternoon from 2 o'clock, because I do my pre-market prep at 2 till 2:30, and I have to be around till at least 4 o'clock. Obviously, if I get a nice move off the back of the open, I can leave earlier, but I don't know for sure that that's going to happen every day, and it doesn't happen every day like that. So I need to make sure that I'm around and focused and not taking any other work or doing anything else at those times. If you're adding to your losses, then you need to implement a few rules. So often the reason why this happens, and again, this was something that I used to do, so I understand it, and I talk to a lot of traders who do this as well. So say, for example, the market's making a move down and you're looking for a reversal. So you place a buy position and the market keeps moving down. You might add to your loss because you think, okay, now it's going to go up. So if I take another position in a buy position, then the second one will cover the money that I lost in the first one, and then the market still keeps going down. Now you've got two losing trades. So then you desperately open another one and it still keeps going down. So this is why you might add to losses. This is what I used to do at the beginning, and this is what I hear a lot of traders do as well. So first of all, you've got to do your one trade a day rule, and one trade at a time, which obviously you would do if you only had a one trade a day rule. But you also want to add an extra confluence. So for me personally, when I was doing this, the confluence that I added was using Heikin Ashi as a momentum indicator, so I could see when momentum actually did change to the other side, and it was almost slowing me down. So I had to wait for an extra candle to close, and I had to wait for an extra confluence. So you don't have to use that one. You can use whichever one works for you, but adding an extra confluence so that you're not entering too early would be really helpful, and it's a rule that you can only enter one trade at a time as well. Showing up at the wrong times. So this is very similar to the previous one, which we talked about, trading when you feel like it. Showing up when you feel like it. So, trading when the market isn't moving. So for this, you want to set alarm clocks to manage your trading day. And this can also be helpful if you get easily distracted, especially if you're working from home. Sometimes it's easy to get distracted by other things and to not show up at the right times. So I have set alarm clocks in my phone, and at the beginning of the day, I will just turn them all on. So I've got 2 o'clock to do my trade prep. I've actually got one for 1:30 to remind me to eat lunch, because I'm never hungry at 1:30. But if I don't eat then, I will get hungry once New York's opened. And if I get hungry when New York's opened, I will want to leave my desk to make some lunch. And obviously I might miss the big move then. So I even have an alarm for that to help me structure my day. Then trade prep at 2 o'clock. I've got an alarm 1 minute before New York opens to pull me back in the room to remind me it's about to open. I've got an alarm for 1 minute before the top of each hour, and also one to remind me when New York has its lunchtime so that I can stop trading. So now that you have established what your biggest weakness is and what's causing you the most losses, you've named it, and if it was any one of those ones that I've just named, then you also have an appropriate solution to help you with it. The next step is actually to take a week off. So this is actually why most people don't manage to change their habits, because they don't actually take any time off. So they might be overtrading one day, and they'll say to themselves, I'm not going to overtrade again. I'm just going to place one trade a day. Then the next day they come back and they're overtrading again. So you actually need to take some time off to almost accept that new habit, and really you drill it into yourself that that is what you're going to be doing. And actually, I know it's boring to take a week off, especially if you've been having all of the dopamine hits of placing lots of trades and overtrading. Then taking a week off is boring, but that's good. We want it to be boring because that's almost the point of it. You almost need to have the pendulum swing so far the other way that you are then able to come back to what you're supposed to be doing. So take a week off and write yourself a little statement about what you're going to be doing, why you're going to be doing it, and it's like a little promise to yourself. So this one, I've given an example of overtrading. So I'm limiting myself to 1 trade a day because I can see my results are still not what I want them to be, and my biggest flaw is overtrading. So I believe that just placing 1 trade a day will allow me to focus on placing 1 high quality trade, which will not only reduce the risk I open, but will also focus my attention on perfecting my strategy. So you write it all out, you identify why you're doing it, why it's going to help you to move forward. And rather than trading each day, just spend the week reminding yourself of your new habit. Then the next thing you want to do is you actually want to practice your new habit on demo. And again, I know people think demo is boring, but I'm such a big fan of demo, especially for the purpose of coaching traders, because it has so much value to helping you iron out your bad habits. Yes, it feels boring. No, you don't get that same rush. But no, you're not supposed to get that same rush when you're trading. You're supposed to be bored when you're trading. If you want to make money as a trader, you actually need to be bored. So let that new habit sink in on a demo account after your week off and practice that way. So the more practice you've had implementing that habit on a demo account, feeling bored, the more likely you are to actually carry that forward. So you don't want to then go onto a live account if you're still making that mistake on a demo account. Why on earth would you want to lose money on a real account if you're losing money on a demo account? So just make sure you've ironed it out already and you've got used to it. And I know this sounds silly, but it's almost like a punishment, because when you're live trading, being put back on demo feels like a punishment. But in a weird way, that's actually good. If you're making bad habits and you want to iron them out, then it's like an incentive not to do them on the live account. Another thing is you want to focus on just improving by 1%. So a lot of the time when traders start trading, they have goals of making 10% a month on a £100,000 account. Now, I know why they do that, because, you know, making 10 grand a month is a lot more fun than aiming for £100. But you've got to understand where you're at in your journey. And if you're only making 1% a month, then you focus on making 2% the next month. You will get to 10% eventually, but you've got to walk before you can run. So every 1% of progress that you make is moving you closer towards your goal. And also, once you feel happy that you have changed one bad habit, as I said, you can go back and then you can try and iron out another one. And if you are looking for a trading coach and you want one-to-one help with your trading, then make sure to email info@tradingangel.co.uk and call it coach. And I will send you some more information on the Trading Angel coaching program. If you found this video helpful, make sure to give it a little thumbs up and let me know in the comments how you got on with it.